Who wins the trade war, China or USA tariffs? The question of who wins the trade war between China and the USA, especially in the context of tariffs, is complex and depends on multiple economic, political, and strategic factors. Here's a detailed overview to help understand the situation better. Background: US-China trade war and tariffs. The US-China trade war officially began in 2018 when the US imposed tariffs on Chinese goods to address trade imbalances, intellectual property concerns, and unfair trade practices. China retaliated with its own tariffs on US goods. Both sides raised tariffs multiple times on hundreds of billions of dollars of each other's exports. Effects of tariffs on both sides impact on the USA. Consumers and businesses. U.S. consumers and companies faced higher prices on imported Chinese goods and components, leading to increased costs for products ranging from electronics to machinery. Supply chain disruptions. Many U.S. companies had supply chains tied to China, causing disruptions and forcing adjustments, including efforts to diversify sourcing. Agriculture. U.S. farmers were hit hard, particularly those exporting soybeans and other commodities to China due to retaliatory tariffs. Jobs and manufacturing. Some U.S. manufacturers benefited from tariffs protecting against cheaper Chinese imports, but overall gains were limited. Inflation and economic growth. Tariffs contributed to price increases, influencing inflation and economic uncertainty. Impact on China. Export challenges. China's export volumes to the U.S. were affected, especially in high-tech sectors targeted by tariffs. Economic slowdown. The trade war contributed to slower economic growth and pressures on Chinese industries. Supply chain diversification. China accelerated efforts to reduce reliance on U.S. technology and shift towards domestic innovation. Global trade strategy. China sought new markets and strengthened trade ties with other countries to offset U.S. tariffs. Domestic reforms. The trade war prompted structural economic reforms and opening up of certain sectors in China. Who won? Neither side had a clear, decisive victory. Mutual losses. Both economies faced costs, disruptions, and slower growth due to the prolonged trade tensions. Leverage and negotiations. While the U.S. aimed to address structural issues like intellectual property theft and trade imbalance, many of those goals remain partially achieved. Phase 1 Agreement 2020. A partial agreement reduced tariff escalations and included Chinese commitments to increase U.S. imports, but many underlying disputes persist. Long-term impact. Both countries have significant incentives to avoid sustained escalation due to the intertwined nature of their economies. Strategic positioning. The U.S. pushed China to improve trade fairness and intellectual property protections. China accelerated moves toward economic self-reliance and diversified global partnerships, both see.